Hello and welcome back to the channel. In today's video I'm going to be covering the beginning of this week's massive flash crash in both the stock and crypto market that was caused directly from fears associated with a weakening global economy. And after that, as usual, I'll be giving an update regarding both Bitcoin and Ethereum, as well as answering the question, is it over for Kaspa? Just before we get into it, make sure you're subscribed with notifications on for the most up-to-date alpha and news regarding the best crypto investments. Anyway, let's get straight into it. Right, so let's go back to where this massive crash began. On Friday, the 2nd of August, we saw a grand total of $2.9 trillion worth wiped out from the stock market. And we did see everything fall, including the Nasdaq, the S&P 500 and the FTSE 100. The majority of this sell-off came from new data from the US government about unemployment rates, as well as lackluster tech company earnings being published. Reports suggested that unemployment in America had hit a 3-year high this month of 4.3%, which is the highest since October 2021 during the late COVID time. This rise in unemployment was unexpected and consequently fueled some concerns about a potential recession, as well as many complaints that the Federal Reserve had waited too long to cut interest rates. Right, so what was the actual root cause of this crash? Well, it was Japan. What's interesting about Japan is that over the last couple decades, unlike the rest of the world where inflation has been an issue, for the Japanese yen, instead it has been suffering from a long-lasting but mild deflation. This meant that for years their interest rates were very low, and since 2016 their interest rates were actually negative. This resulted in lots of foreign buyers borrowing money from Japan to invest it elsewhere, such as in the US stock market or in bonds and other commodities. So effectively this was a form of arbitrage between different interest rates of different countries. This is known as a carry trade. Now, as of last week, since deflation was becoming less of an issue for the Japanese yen, the Japanese government decided to increase their interest rates to 0.25%, which is actually the highest it has been in over 15 years. This caused the Japanese yen to go up in value against the dollar, which means that for those who had borrowed money from Japan, they now owed more dollars to be able to repay their debts to the Japanese. And it seems that many who had borrowed money from Japan were actually over leveraged in their investments and trading on the margin. This created a total collapse and failure of the carry trades, causing them massive selling pressure on the entire global markets, and stocks began to free fall. So it becomes clear in hindsight that many in the market who had been conducting these carry trades while borrowing masses of cash from Japan were very over leveraged. So when this news came out, many quickly began to sell their investments given the now higher borrowing rate from Japan. This, paired with the news surrounding America's unemployment and bad earnings, caused the worst one-day stock market flash crash in over 2 years. In fact, Japan's stock market saw its single worst day in 27 years, as many began to realize that they might not get their debts repaid quickly enough. On top of that, Taiwan's stock market saw their worst day in 58 years. So not exactly the best day to kick off a week of trading. In terms of America, with all its new data of increasing unemployment and worse than expected earnings from the top companies, it gives us a telling message that we are not in a recession yet, but the US economy is weakening, and so it is now up to the Federal Reserve to step in. The likelihood, however, is that the US Fed will not enact an emergency cut in interest rates, since their next meeting is just over a month away, on September the 17th anyway. Therefore, calling an emergency unscheduled meeting now would be counterproductive and would likely just fuel more panic, so they'll likely hold off with the interest rate cuts for another month. So what does this whole situation actually mean for the crypto market? Well, this major crash not only rocked the stock market, but also the crypto market, which saw masses of red too as widespread panic and fear circulated, culminating in a huge drop during the morning of Monday the 5th. Luckily for us, late on Monday and Tuesday, we did see a fairly strong bounce back, which is great news and suggests strong support for the crypto market despite these uncertain times. But we are still looking to continue that recovery, as we are still significantly below the levels that we were before the crash began. Anyway, let's begin by taking a closer look at Bitcoin. As always, it's important to take a look at the Bitcoin ETF inflows, since it gives us a great idea about the bullishness of the Wall Street hedge funds. And as you can see, on Friday, amidst the wider sell-off, there was actually a negative $237 million in net ETF inflows. Just for your information, by the way, that is the most outflows in one day of Bitcoin ETF trading since May the 1st, over 3 months ago. Do not stress out or be concerned by this though, outflow, as it's not unsurprising given the amount of massive sell-off that we saw on that day anyway across all of the markets. The Monday that followed that was again a large $168 million worth of net outflows by the Bitcoin ETFs and $148 million on Tuesday. So according to this data, it becomes clear right now in terms of Bitcoin, the ETFs are still holding back on loading up on Bitcoin at these cheaper rates. This is relatively unsurprising though, since all of these firms will be struggling in all areas of their investments right now across many different markets. Therefore, it will likely still be some time at least before they start beginning buying more aggressively at this dip. Alternatively, it could mean that we are still in very uncertain territory, as these firms may be holding off buying more now since they suspect we could still go lower first. But in my opinion, it is most likely more of a cash flow issue, considering these institutions' other investments such as in stocks are likely struggling a lot right now as well. Looking at Bitcoin's price now, and despite the massive crash on Monday where Bitcoin plummeted to 49k, within the same weekly candle that we are currently in, it has so far managed to regain much of its lost ground, meaning that the candle is likely going to close within this channel, a channel which I believe has long appeared to be a big bull flag type structure, so there is no massive break in that structure just yet, despite this long wick down. From the Monday lows of 49k, on that same day we regained a position of around 52k. Then on Tuesday continued to see Bitcoin regaining strength and we closed in the green around 56k. And finally, most recently on Wednesday, the day that I'm currently recording on, however, we have seen a slight fall today just below 55k. This isn't a massive concern at the moment, and right now it's a bit too early to suggest where the price will move in the short term, but very soon we're looking hopefully to continue our recovery upwards towards 60k. Now taking a look at Ethereum's price action, and just like Bitcoin, there has been a significant sell-off during the crash. The interesting thing is that the American ETFs, and in particular Grayscale, have been easing off their selling. As you can see, the number of millions that they have sold over the last few days has been decreasing. On Friday, the net outflow was just $54 million worth of Ethereum, and strangely enough, on Monday, the day of the large market crash, Grayscale sold to just $46 million worth of Ethereum, and the other ETFs bought more, meaning that there was actually a positive net inflow of $48 million worth of Ethereum. Then on Tuesday, Grayscale sold even less, and we saw another positive net inflow day of $98 million. Consequently, this data highlights the fact that unlike for Bitcoin, these ETFs are taking advantage of Ethereum's cheaper prices since the crash, capitalizing on it under $2,700, which is a bullish sign for Ethereum. Just quickly, before I dive into the Kaspa segment, I'm trying to hit 2,000 subscribers by the end of August, and only around 26% of you guys watching right now are actually subbed, so I would massively appreciate it if you guys could smash that subscribe button and put the bell notifications on as well. Now on to Kaspa, and unfortunately for us Kaspa fanatics out there, we saw price crash right the way down to 12.5 cents with this big wick downwards. Now you could argue from a technical standpoint this rising wedge was a sign that there would be a very short-term correction on its way, but clearly this much bigger than expected dip was directly tied to the crash that every market saw between Friday to Monday. As always with these major news stories that come out about global issues, such as this time with Japan and America, ultimately it is these largely unforeseen events that have no doubt created an atmosphere of FUD surrounding crypto, and particularly Kaspa at the moment. Following Monday's big wick down, Kaspa quickly regained much of its lost ground and hangs around the 15 to 16 cents range at the moment. As of the short term, it is particularly difficult to predict Kaspa's next immediate price action moves, largely because the current landscape of the market is extremely uncertain. We do know now though that bullish flat top triangle that I'd been mentioning in my last video has now been invalidated, and now we could be seeing a longer amount of time before Kaspa is able to retest new all-time highs and fully breaks out of this very long and extended final shakeout, hopefully making new massive all-time highs above 40 cents as we look to hit a new major peak soon, as per my rough 8-month fractal that you can see on screen here. Now, arguably right now, this is the most bullish and in fact most important Kaspa chart to take a look at. This is the Kaspa versus Bitcoin chart, and despite this week's turbulent flash crash, Kaspa has superbly held its strength against Bitcoin and perfectly has bounced off this strong support region here, keeping its head afloat just under 300 satoshis. This is extremely bullish as it highlights the strength of Kaspa as a crypto to be able to retain such a strong weekly dominance over Bitcoin, particularly as many altcoins have continued to bleed far worse than Bitcoin during this crash, but Kaspa still looks strong against it and hopefully should be able to spring to new heights in the coming weeks. Just for your information by the way, if you compare the Kaspa BTC chart to ETH BTC, for example, Ethereum has continuously lost ground against Bitcoin, just like the Cardano BTC chart and the Litecoin BTC chart. Judging by this weekly candle, it appears that Kaspa will continue this uptrend against Bitcoin and will likely be making new all-time highs against Bitcoin within, hopefully, a few weeks, which would line up nicely with Kaspa's large price pump above 40 cents, which is still expected to occur hopefully within this or next month, now that we have had a slight delay due to the market crash. Now, unfortunately, Kaspa had a big announcement on Monday, but it went largely overshadowed by the massive dip. This announcement was that Binance had started a mining pool that supports Kaspa. If it wasn't already obvious, this now 100% guarantees that Binance will no doubt spotlist Kaspa very soon, and I believe that they will choose to once Kaspa begins its next huge pump past 25 cents. By the way, this is the only mining pool that Binance currently supports of a coin that is not already spot listed by them, so it's clear that they are trying to accumulate as much Kaspa as possible before they spot list it for their own customers to be able to buy it. This announcement is obviously bullish for the network itself too, as it promotes greater decentralization for the network by attracting more retail miners to join the pool, as well as contributing to a greater hash rate, which recently hit a new all-time high of a staggering 753 petahash per second and is currently working right now at 712. So hitting 1 exahash per second grows nearer and nearer, which is super bullish and is just likely a matter of weeks away. Binance's mining pool was not the only major news to come out of this week though. Kraken also released their official roadmap of coins that they are going to spotlist soon, and guess who made it onto that list? Yep, you guessed correct, Kaspa. In my last video I discussed that I believe both a Binance and Kraken listing would be the first tier 1 exchanges to spotlist Kaspa, and now with these updates you can see that this is becoming closer and closer to becoming true, as we could see listings as early as late August. Binance and Kraken will be the tip of the iceberg before the rest of the other tier 1 exchanges also spotlist Kaspa. Other nice bullish signals for Kaspa include the fact that on Tuesday, for the first time ever, it entered the top 20 biggest cryptocurrencies in the entire market. Also, Tuesday's volume hit a massive new all-time high 24-hour volume of $560 million, over $500 million, which is just staggering. So to answer the question of the title, is it over for Kaspa and is Kaspa doomed? In my strong opinion, absolutely not, and by no means should you even be considering selling yet. I know that influencers online are constantly saying that we are in the final dip and to trust me, this is the last shakeout and so on, but I do believe that we are actually nearing the end of the last major dip before we pump higher with Kaspa. Right now though is an unprecedented time we're seeing, and the market conditions are very unpredictable. However, Kaspa will be able to weather this storm. It might be weeks or it could be months, but whatever happens, I know that I'm holding an unbelievably great asset, which will no doubt provide me with a reward for my patience in the future. It is the first trilemma solver. Kaspa is a one-of-a-kind crypto and many will make millions from it. Remember that the true crypto bull market has not even gotten started yet. That is still programmed for 2025, but now is the time to watch, learn and relax, as well as staying far away from that panic sell button. As I mentioned in my last video, I'm soon going to be opening a private members group where I'm going to discuss my strategies, tips and a whole load more. So if you're interested in joining that, let me know down in the comments. Please do follow me on Twitter, as it is the place where I can post the most up-to-date news, as I often cannot give you guys instant updates on YouTube, since making these videos often takes me over 12 hours to gather the information, record and edit. I do massively appreciate those of you who have been supporting me recently, despite the YouTube algorithm not pushing me out to as many viewers as usual. Please do help me out by hitting that like button and commenting your thoughts to help push my content out to more people. For those of you who haven't already, please subscribe with bell notifications on to get notified every single time I post. Anyway, thank you for watching and I'll see you in the next video. Bye bye.